Good morning, MMTs. It's 6:28 a.m. That bell's going to ring in 2 minutes. How about that? 8/9/2012. It's live. It's here. It's now. What are we looking at? Simple little gaps on these two names. Why? Intraday price movements. They pay the money. So let's get back over here to that 645 put, which was marked down again. I will give a bid in the near-term channel range at the lower end of this market at $1.80. So you could put a couple of limit orders out at $1.80. You could put a couple of limit orders out at $2.20. So you could go 3, then 2, that equals 5, and then at $2 and let's say 50 pennies, you start buying one in there. What would that be based on? The equity has a gap open up price from the close that would run that straight up to that higher resistance to test it, and then we would look for the high frequency electronic bot to cross the market, and that's where the reversals would come in. Knowing how to exit is the most important thing. Let's go over here and get the 810-650 put. We have 1 minute to the opening bell. Let's get bids down here at 580, let's say, and let's start some bids here at 620. We'll start some bids at 640. The lower bid is a higher volume entry. The upper bid is a lower volume entry. And here we are now live on that opening bell. 380 punched right here on the opening bell, that 645 put. We've been open for about 1 minute. It's all about getting that wholesale bid, that markdown. Look at that resistance. They're hitting that stock right up to those highs. 645.96. Can he take it out? He is. That robot just slid the bid. So that's a 380 low, 285 by 340. 340 was the last print. Now, MMT, we are over here, just like I was saying before the opening bell. We're at 580 by 670. Now, based on that wall of resistance, go in there and start buying at $6 right now. Buy one contract. Let me see that bid out there. Put it out there at $6 at 660 by 580. Put it out there at 6. You refuse to. When you take too many milliseconds to get your limit order out, you do not belong in this business and should stay out of this business, because you got to get this side to throw off. So here we go. Now look at the markdown. That's a $3.30 markdown, MMT. And I said to take only one contract, because what it does, it limit out of that one. 295, it says, is a low. Here we are live. Now, on this order, that's the markdown of the opening bell. Here we are live right now, limiting out at 680, of course. Once again, it's about making that opening bell. One thing you have to make sure of, though, is that your execution model and routing system to make these transactions, they just sold it and took the money. Now, I want you to put another bid down there. I was the low of the day, because on this very video, I gave that price, and no one's going to deny it. Now, I just sold it out for a profit, and no one's going to deny that either. Now, bid it back up at 620. How to trade the opening bell in 5 minutes on an order execution with the limit in and a limit out, with the profits, with the execution, with the routing system, with the high frequency trading model and the option trading routing system, stealing that wholesale bid mark down here and then letting that thing run up right in front of your face after you marked it from 540 to 280, $4 by 460.